Welcome to this WTR Small-Cap Spotlight podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's episode, I'm being joined by my colleague and Senior Energy and Sustainable Investing Analyst, Peter Gastreich. On today's call, Peter will discuss investment implications from an event in the synthetic aviation fuel, or SAF space, that has garnered attention from investors and the press, including the publication SAF Investor. I'm referring to Southwest Airlines' divestment of its SAF business. Good morning, Peter, and thanks for joining us today.
Good morning, Tim. It's great to be here.
So, Peter, just to kick things off, I know recently that Southwest Airlines divested its SAF technology company, Sapphire Renewables, a topic covered in the media, including in SAF Investor itself. What does this move signify for the airline and, more importantly, for the broader SAF sector, in your opinion?
Well, Southwest's decision, it has raised some questions in the market regarding its commitment to decarbonization, particularly in relation to SAF adoption. But I do think it's a bit, premature at this stage to look at it that way. I would not view this as a pivot away from SAF, and certainly not a pivot away from airline decarbonization plans. But it could signify potential change in terms of the strategies that airlines are looking to pursue. In this case, for Southwest, the sale includes Sapphire's intellectual property, their DMR technology, which is used for converting a corn stover to ethanol, and a proposed pilot plant in Kansas.
Great. Peter, out of curiosity, why do you think Southwest Airlines initially invested in renewable fuel production, and what led to the shift in direction when, in fact, one would think that they could just go out and buy it directly from an SAF producer?
Yeah, well, I think the answer to that is yes, that's exactly what they can do, and I think that's what Southwest is coming around to now. But why in the first place? We need to sort of step back to that mindset of a few years ago when investors first started to incorporate this ESG mindset into their process, and in response to a lot of those initial demands, you saw a lot of quick fixes that were coming from companies. Turning to airlines specifically, what's a core competence for an airline? Is it renewable fuels, or is it flight operations and customer service? I think most of us can answer that question. But that said, Southwest is still fully engaged in decarbonization, and now Sapphire's SAF IP is sitting with a company that arguably is ready to take that forward in ways that Southwest probably couldn't. And Southwest will still be gaining access to SAF product through purchase agreements. So this arrangement just appears to be more sensible.
Do you think Southwest's latest approach will become a blueprint for other airlines, or are they an outlier?
I think it could, and maybe it is a bit too early to say, but it does make sense to think about core competence and management resources as discussed. Also, well-structured offtake agreements can reduce those operational and financial risks for both sides here, both the supplier and the buyer. So that's something to consider.
Okay. And how does this strategic shift affect investor sentiment, in your opinion, toward SAF projects in general?
Well, if we compare to, say, 12 to 18 months ago, enthusiasm has cooled somewhat, but the investor attitudes are very definitely more positive than what we saw during that peak policy uncertainty earlier this year. The main change is in the timing and approach. Investors are more cautious, but I think that their intent to invest in SAF endures, whether you're talking about in the market or you're talking about the project operators. So when compared to other energy investments, that's another area to look at. I think compared to both traditional energy and sustainable, SAF continues to look just very intriguing. You have this combination of a very large global demand growth outlook, the link to agriculture, the link to energy dominance policy here in the US. You have a competitive producer advantage here in the US. And also, lately you see these growing carbon credit markets as something which can potentially enhance the revenue stream for these producers. So these all suggest that SAF has strong prospects, and it's worth the investor attention. Also, I think it's important to delineate the sentiment when we talk about short-term investors versus the project operators. Short-term investors, they may be focused on the fact that yes, today there is currently an oversupply of renewable fuels. But project operators, on the other hand, they're not looking at that. They're focusing on this long-term game and an expected 100 times growth in demand for SAF in the coming 25 years. So this will become very clear the closer we get to 2030, which is the year where we're going to see a significant boost in terms of those mandates, which is going to be led by Europe. But just circling back to Southwest Airlines actions, I'd say that the investors should see this overall as a practical adjustment. And if anything, this kind of changing of hands, if you will, of that technology and aligning with core competence, it should be something that's kind of positive for moving the industry forward.
Great. What has been the most significant policy development for SAF investment in the U.S. in 2025?
I would point to the passage of the Big Beautiful Bill. This policy, it did reduce the maximum 45Z tax credit from $1.75 to $1 per gallon, which is a challenge for new projects, not a positive. But at the same time, we have to look at the whole picture here. We can't overlook the fact that the credit itself, it was extended by 2 years from 2027 to 2029. And its transferability, very important for tax credit, is fully supported. Although that 2-year extension that I mentioned, it may not by itself, spark new projects, it does provide some stability for the projects that are in more advanced stages and for the existing capacity. Also importantly, the fact that 45Z still exists at all after all this policy debate at any level is in itself a positive because it does keep that door open for future policy debates. And we believe those future policy debates will conclude in favor of SAF.
So peeling the onion layers back, perhaps another layer, you previously referenced policy being left open for future discussion. How would you characterize U.S. policy support of SAF and broader agricultural interests?
Well, it's a good question, Tim, and it's a very important one. U.S. policy promotes an abundance mindset. This is backed ultimately by bipartisan support for SAF's positive impacts on agriculture, on rural economies, and domestic energy. If you look at corn and soybean yields, they've been increasing steadily for decades. And SAF is something that can move in and offer a very practical and valuable use for these expanding harvests. You also have potential for next generation feedstocks in the future, like woody biomass and switchgrass. I'd also add that nearly all ethanol that's produced today, I think everyone knows this, it goes into gasoline blending. Also not a big secret that demand for gasoline is very likely going to be drying up over the longer term, even medium term, as we see electric vehicles move in and gain more market share. So you're going to have this displacement of that market, which will also, in addition, elevate the need for SAF to step in as a major new market for corn. And I'll just finish with an example on this one. Is that in our recent WTR fireside chat with GEVO, which is a company we have under stock coverage, management shared that the company has identified about 180 operating ethanol plants in the U.S. alone that can be transformed into SAF production. In their case, it refers to the company's modular ATJ-30 plants. That means 30 million gallons alcohol to jet SAF capacity plants.
Okay. With this discussion in mind, can you comment on the durability and structure of SAF projects in general, as obviously one cannot know whether future policy will be a headwind or tailwind?
Yeah, I think something investors really need to consider is that most of the companies that are pushing SAF projects forward successfully are those who have structured those projects to be durable in the face of regulatory risks. This is something we've heard time and time again from the companies that we have under coverage at WTR and also the companies that we have interviewed on our multiple podcasts in the space. They seek durably structured projects. So the kind of questions investors should be asking, along this vein include, what's the carbon intensity score of the SAF? That's important because that will determine what customers are willing to pay for that product. The lower the CI score, the better the price they're going to get for their product. How are the offtake agreements structured? Well, this is not always something that the companies really make public or are going to share completely, but investors should try to get some feel for whether customers are going to be sharing some of that policy uncertainty with the project operators. And another thing is that, is the company pursuing sales in carbon markets? This is a huge kind of like growth area. This is important because carbon markets can provide additional revenue streams, and we're seeing that already with some companies that we've looked at. So, and these are just a few of the questions to consider.
Okay, great. What are some examples of companies in the SAF supply chain that are making documented progress?
Well, when we say the SAF supply chain, this can include both operators and companies that produce or plan to produce, say, SAF feedstocks, like low carbon ethanol. We have a lot of content for investors who are kind of launching their due diligence process here. For starters, companies under our formal coverage at WTR include GEVO for SAF and low carbon ethanol. They do both. Green Plains is a low carbon ethanol producer, and you have NESTE for SAF. Companies that we've hosted for podcasts and written up in our recap reports include Rex American Resources as a low carbon ethanol producer and XCF Global as a SAF producer. And finally, just outside of the podcast, we have highlighted a lot of companies within our featured kind of industry content. Those include like Calumet with its Montana Renewables subsidiary, Comstock with its Bioleum Corporation investment, and Darling Ingredients with its Diamond Green Diesel JV with Valero. But finally, I'd just like to highlight that we are about to announce a fireside chat with Houston American Energy Corp, which is ticker HUSA. That company converts waste plastics into high-value drop-in low-carbon fuels and chemical products. So stay tuned for that. You won't want to miss it.
Great. Thank you for those SAF industry insights, Peter, and a special thanks to the producer and editor of the podcast, Joe Brunetto. Thank you for listening, and don't forget to subscribe, as well as visiting www.watertowerresearch.com to read Peter's latest research on renewable fuels, as well as to access countless other small cap equity research reports, podcasts, fireside chats, and conference schedules from Water Tower Research. We'll see you next time for another edition of the WTR Small Cap Spotlight podcast.